Breaking the record, and not in a good way. The Dow snapping its 9-day winning streak. Let's bring in today's market panel. We have Jason Rotman from Lido Isle Advisors, and Kevin is here. Kevin Rotman from Recon Capital Partners. Sorry, Kevin, it was kind of wrong on the prompter there. Now, Jason, it's nice that you can come off of a streak like we've had with a downturn that's not a real big sell-off, isn't it?
Exactly. I mean, the first thing that comes to mind, David, is that this is your classic wall of worry scenario, which is what happens when the market keeps on, trickling higher with people just scared of some next unforeseen event that never happens. So the market has gone up 9 days in a row. This is a minimal pullback in front of a very important Fed meeting. Nothing to be alarmed about.
Kevin, we've had some pretty good economic news. Liz was talking about that earlier. And next week we have the Fed meeting, but I'm not hearing anything about a rate rise. If they're not going to raise rates now, when will they?
You know, that's really tough to tell, especially because the economic data is coming in mixed. It's really hard to say that the Fed could raise rates, especially with a flattening yield curve, but I think the market is really focused on earnings. If you think about it, it's just the market is actually an accumulation of companies and their earnings, and so the market is focused on companies' guidance going forward. So if you looked at earnings this week, whether it was Johnson & Johnson or Microsoft, where they beat on the top line, bottom line, increased guidance, that's what's really dictating market moves. Next week, people aren't really going to be concerned about the Fed. They're going to be concerned about the company's actual results.
Jason, isn't there a concern that we've had zero interest rates for too long? It's time for a rate hike.
There is, and the only reason that we have not gotten rate hike number 2 this year was activities outside of the U.S., Brexit, etc. I think we will have one rate hike this year. It will not happen next Tuesday, but it'll probably happen in the fall, especially if the jobs growth and the wage growth continues to go up, even incrementally.
Hey, guys, let me stop you for a moment. We have Starbucks reporting third quarter results. Ashley Webster in the newsroom. Ashley, what are the numbers?
Well, I'll tell you, David, on earnings per share coming in at an adjusted 49 cents a share. That is exactly where it was supposed to be. And on the revenue, $5.24 billion. A slight miss. The expectation was for $5.3 billion. Same-store sales, that's one of the key components they look at in this type of report. Starbucks reporting up 7% in China. They've made a big push in China, also looking towards India, so that sounds healthy. A 4% rise in same-store sales in the U.S., okay, perhaps on the lower end of the expectations, and globally up 4% same-store sales. That number was up 6% in the previous quarter, so a little down. And looking ahead, perhaps the numbers not quite where expectations were, and as a result, we've seen Starbucks, as you can see, trading down 4 to 5% in after hours, David. So okay, miss on revenue. They met expectations on earnings, but some of these numbers are a little soft. Waiting to get into the loyalty program, that kind of stuff, which has proven to be a good source of revenue for them. Mobile payments as well, but down 5% now on these results.
That's bad down right after the closing bell. It's a $3 loss. Kevin, this is a company that was going great guns for the past year. What happened? Was it just due for a downturn or what?
No, I don't think so. I think this is a company that does right by its stakeholders and not only its shareholders. So we're going to see some guidance on that, and especially going into China. But look at what they're doing there. They actually have a partner for mobile payments in China. That's the next leg of growth. We're going to want to see guidance on their new food initiative with Princi. They've bought that pizzeria, and they can expand outside of Italy there. Also, they increased pay for their employees, as well as they're increasing stock-based compensation. So we're going to want to see that, but that may be trickling through on some of these misses. So,
well, Jason, let's face it. This is a commodity-based company. They have to buy a lot of coffee in order to sell what they sell. When the dollar is strong, commodities go down. That's what's been happening the past year. Is that why they've been going great guns, and maybe there's some worry about whether the dollar will continue its strength for this company?
Yes, but I think the bigger picture is that they're going through this transition, if you could call it that, a la, getting into India and China for the next 30 years of their company's future growth. They're transitioning their rewards program into a more spending-based program. So yes, the dollar has something to do with it, but it's more the transitionary element of Starbucks, which is why I believe it's a long-term buy and hold. They're increasing their dividends, $75 price target.
Kevin, I'm just wondering how many folks in China, I know they have a huge growing middle class there, but still, Starbucks coffee is expensive. Their expenses are directly tied into the price of coffee. Isn't there a limit to how much we can have of this in China?
There is, and we're actually going to have to see what their tastes are, right? I mean, basically, there's an assumption by Starbucks that the Chinese will actually like this, but we're seeing middle-class growth there from 50 million people to 500 million by 2020, so they're hoping they can get even just a fraction of that.
All right, the Department of Justice suing to block 2 major healthcare mergers through antitrust lawsuits, claiming Anthem's bid for Cigna and Aetna's proposed merger with Humana would reduce competition and harm consumers. Jason, I mean, it's amazing to me. So they were okay with the deal between Anheuser-Busch and SAB Miller, but this one isn't okay. What's the difference?
Maybe they were drunk at the time when they approved the beer merger.
That was too easy. I laid that up for you.
Anyway, listen, the point is that this is honestly an anti-capitalist move by the Department of Justice. I mean, if they're going to block something, why not block something where the big 5 become the big 1? There's still 3, okay? These big 3 are still blatantly competing with each other to provide more bang for the buck for the consumer. That's all they need to know. This is an incorrect move.
Although, I mean, Kevin, to be fair, a lot of times you see only one provider in a state, or only one provider is providing along, you know, the Obamacare websites. So the fewer and fewer companies there are out there, it does become more narrow. I mean, which is it? Would they lower costs or raise costs if they became 3?
And you're seeing that's actually an argument that's going to happen. They're actually going to fight the Department of Justice on this, and they actually have a great argument when it comes to that, because they're talking about most of the policies are coming out on the statewide exchanges. But this further reinforces that investors need to be careful of investing in a market that is regulated, especially by the Affordable Care Act, Medicare, Medicaid. So you have to be very careful. But the big winner out of this entire thing is United Healthcare, the big one overall that these other competitors are trying to get together and take on head-to-head.
Okay. Thanks, guys.